Global Monetary Watch welcomes you, and today is July 27. Thank you for joining us for another detailed update on developments surrounding the Iraqi dinar. In today's report, we're taking a closer look at two topics that have been circulating widely across the IQD community. The first involves reports of a newly discussed 10 million Iraqi dinar transaction limit, while the second centers on repeated claims that an exchange rate of 5.89 has somehow surfaced ahead of any official announcement. Rather than focusing on speculation, we'll examine these topics through the lens of publicly available information, institutional practices, and documented monetary policy. Over the years, the Iraqi dinar community has grown into a large network of individuals who closely follow economic reforms, banking developments, and official announcements from Iraq. Many participants have spent years monitoring news from the Central Bank of Iraq, international organizations, and financial institutions. This long period of observation has naturally created an environment where every new rumor, document, or policy update receives significant attention. Because expectations have remained high for so long, even small pieces of information can quickly become major discussion points across online communities. One important factor behind this environment is the constant search for meaningful signals. Whenever investors expect an important financial event, there is naturally greater demand for information that appears to confirm those expectations. As demand for such information increases, more unofficial interpretations, leaked documents, and unverified reports begin circulating online. Some of these may come from honest misunderstandings, while others may result from incomplete information or incorrect assumptions. Regardless of their origin, these reports often spread rapidly once they are shared repeatedly across social media platforms, forums, and video channels. The discussion surrounding the reported 5.89 exchange rate is a good example of how information can evolve within an active community. At present, there is no publicly available documentation from the Central Bank of Iraq, the International Monetary Fund, the World Bank, or other recognized institutions confirming such a figure as an officially approved exchange rate. Without confirmation from primary sources, any specific number should be viewed as an unverified community claim rather than an established monetary decision. This distinction is important because unofficial figures often gain credibility simply through repetition rather than documented evidence. There are several possible explanations for how a number like 5.89 might appear in public discussions without representing an official exchange rate. It could result from someone interpreting a financial model or historical comparison as a future projection. It may also originate from a document discussing a completely different subject, such as a budget scenario, economic analysis, or theoretical calculation, which later becomes separated from its original context. As information passes from one source to another, details can gradually change, making an estimate appear to be an official disclosure even when no such announcement has ever occurred. From the perspective of central banking, officially revealing a future exchange rate before implementation would create significant practical challenges. Financial authorities generally seek to maintain orderly markets and avoid unnecessary speculation. If market participants knew an exact exchange rate in advance, they could position themselves ahead of official action, potentially disrupting financial stability. Because of this, central banks around the world typically communicate major monetary decisions through carefully planned official announcements, rather than through unofficial leaks or rumors circulating within investor communities. Understanding this institutional approach helps explain why many analysts place greater emphasis on official publications than on community reports. Central banks operate within structured policy frameworks designed to protect confidence in the financial system. Their communication processes are intended to reduce uncertainty while ensuring that major policy decisions are implemented in an organized manner. This does not mean that every rumor is intentionally misleading, but it does suggest that unofficial reports should always be evaluated alongside reliable documentation before being accepted as factual. Looking beyond Iraq, history provides useful examples of how monetary reforms often unfold over time rather than through sudden dramatic events. During the early stages of Vietnam's economic modernization, the Vietnamese dong experienced a series of gradual policy adjustments instead of one immediate transformation. Authorities focused on improving financial regulation, strengthening monetary management, and aligning domestic policies with broader international standards. The process involved multiple reforms that collectively reshaped the country's financial system over an extended period, rather than relying on a single announcement to achieve long-term stability. The Vietnamese experience illustrates a broader principle frequently observed in monetary reform programs around the world. Governments and central banks generally prefer carefully managed transitions that allow markets, businesses, and financial institutions to adapt gradually. Such an approach reduces unnecessary volatility while giving policymakers opportunities to evaluate the effects of each reform before introducing additional changes. Although every country's circumstances are unique, the emphasis on measured implementation has become a common feature of institutional monetary policy across many developing and emerging economies. Recent developments within Iraq have shown a continuing focus on financial compliance, banking modernization, currency management, and international cooperation. Measures related to banking oversight, foreign exchange operations, and regulatory improvements have been discussed publicly over several years. These initiatives are generally presented as part of broader efforts to strengthen Iraq's financial infrastructure and align certain banking practices with internationally recognized standards. Whether discussing transaction monitoring or broader economic reforms, official institutions consistently emphasize stability, transparency, and compliance as central objectives. The discussion about Iraq's monetary system cannot be separated from one of the country's most important economic foundations, its oil sector. Oil exports remain the primary source of government revenue and provide the foreign currency reserves that support many aspects of Iraq's financial system. These revenues help finance public spending, strengthen reserve holdings at the Central Bank of Iraq, and contribute to the country's overall economic stability. Because of this relationship, many analysts closely monitor developments in global energy markets when evaluating Iraq's broader economic outlook, recognizing that changes in energy revenue can influence the country's fiscal position over time. Current conditions in the international oil market present a balanced picture, rather than one defined by extremes. Although oil prices have fluctuated compared with previous years, Iraq continues to generate significant export income through its energy sector. Production decisions made by OPEC+ remain an important factor affecting market conditions, while global demand continues to evolve alongside changes in economic activity and long-term energy policies. These factors collectively shape Iraq's revenue environment, making oil production levels and export performance just as important as price movements when assessing the country's financial position. Another element attracting attention is Iraq's ongoing efforts to expand production capacity and improve export infrastructure. Various projects involving southern oil fields and discussions surrounding northern export routes have remained part of Iraq's long-term energy strategy. While these initiatives face operational and political challenges, they demonstrate the country's continued focus on increasing production efficiency and strengthening its role within global energy markets. Higher production capacity, combined with stable export operations, has the potential to support government revenues over an extended period, provided international market conditions remain favorable. For observers following Iraq's monetary developments, the connection between oil income and foreign currency reserves is especially significant. Revenue generated from energy exports provides hard currency that can strengthen the country's reserve position. These reserves play an important role in supporting monetary operations and maintaining confidence in financial institutions. However, it is equally important to recognize that exchange rate management depends on numerous economic variables, including fiscal policy, inflation, banking reforms, and international financial conditions. Oil revenue represents one important factor within a much broader economic framework. Another topic receiving attention involves the evolving structure of international energy trade. For many decades, crude oil transactions have largely been conducted in US dollars, creating a well-established global payment system. Iraq's oil exports have historically followed this pattern, resulting in substantial dollar inflows that support the country's foreign exchange reserves. This long-standing framework has influenced how Iraq manages its monetary operations and interacts with international financial markets, making dollar-denominated energy sales an important part of the country's overall financial structure. At the same time, some international discussions have explored the possibility of conducting a portion of global trade using additional currencies. Certain countries have examined alternative settlement arrangements for selected transactions, although these developments remain limited compared with the overall size of worldwide oil trade. These conversations reflect broader changes occurring within international commerce, where some governments and trading partners continue exploring greater flexibility in payment methods. While these developments are noteworthy, they should not be interpreted as evidence of immediate changes to Iraq's existing monetary policies or exchange rate framework. For Iraq specifically, growing commercial relationships with Asian economies have attracted attention because these markets represent important buyers of Iraqi crude oil. As trade relationships expand, discussions occasionally arise regarding future settlement mechanisms and payment options. However, any significant adjustments to international trade practices would likely occur gradually and involve coordination among multiple governments, financial institutions, and commercial partners. At present, such discussions remain part of broader global economic trends rather than confirmed policy changes directly affecting Iraq's domestic currency. Looking at these developments together highlights an important point often overlooked during online discussions. Large-scale changes involving international trade, reserve management, or exchange rate policy typically develop over long periods rather than appearing suddenly. Governments, central banks, and international organizations generally introduce reforms through carefully managed processes designed to maintain stability. As a result, isolated rumors or individual reports should be viewed within the broader context of documented economic reforms instead of being interpreted as evidence of immediate monetary shifts. For anyone seeking to understand Iraq's monetary environment, reliable information remains essential. Official publications from the Central Bank of Iraq, along with publicly available reports issued by organizations such as the International Monetary Fund and the World Bank, provide detailed analysis of banking reforms, fiscal conditions, and monetary developments. Although these documents may be more technical than social media discussions, they represent primary sources prepared through established institutional processes and therefore offer a stronger factual basis for evaluating ongoing developments. Comparing official documentation with circulating online claims can help distinguish verified information from speculation. Community discussions often raise interesting questions and encourage debate, But important financial developments are generally confirmed through formal institutional channels rather than unofficial reports. Examining multiple credible sources allows observers to better understand both the progress being made and the uncertainties that remain. This balanced approach supports a clearer understanding of Iraq's evolving financial system while reducing the likelihood of misunderstanding complex economic developments. The pace of Iraq's financial and institutional reforms is another important factor to consider when reviewing ongoing developments related to the Iraqi dinar. Publicly available reports issued over recent years describe reforms that extend across banking supervision, anti-money laundering measures, payment system modernization, foreign exchange management, and broader financial governance. These initiatives are generally introduced in stages rather than all at once, allowing institutions time to implement new procedures while maintaining stability throughout the banking system. This gradual approach reflects how many central banks around the world manage significant economic reforms. When evaluating reports about the Iraqi dinar, it is also useful to distinguish between documented policy actions and community discussions. Official announcements typically provide clear explanations of regulatory changes, while online conversations often include personal interpretations that can vary widely. As information is shared repeatedly across different platforms, the original context may become less clear, making it increasingly difficult to separate confirmed facts from assumptions. This is why many analysts recommend verifying important claims through official publications before drawing conclusions about their significance. The reported discussion surrounding a 10 million Iraqi dinar transaction limit has generated considerable attention within the IQD community. If such a regulatory threshold exists as described, one reasonable interpretation is that it relates to banking compliance, transaction monitoring, or administrative procedures designed to align financial operations with international regulatory standards. Similar thresholds are commonly used by financial institutions in many countries to strengthen oversight and support anti-money laundering requirements. On its own, however, a compliance measure should not automatically be interpreted as confirmation of an upcoming exchange rate adjustment. Likewise, the widely discussed 5D9 exchange rate remains unsupported by publicly available documentation from recognized institutions. Neither the Central Bank of Iraq nor major international organizations have released official statements confirming that figure as an approved exchange rate. Because no primary source evidence has been presented, the number should be viewed as an unverified community claim rather than an institutional announcement. Treating unofficial figures with appropriate caution helps reduce confusion and encourages a more accurate understanding of ongoing monetary developments. The broader story surrounding Iraq's economy is centered on gradual institutional progress rather than dramatic headlines. Banking reforms, compliance improvements, modernization efforts, reserve management, and economic cooperation have all been documented through official channels over several years. These developments may not produce immediate changes, but they represent measurable efforts aimed at strengthening Iraq's financial infrastructure. Understanding these reforms within their broader economic context provides a more balanced perspective than focusing solely on isolated rumors or unconfirmed reports. Another important consideration is the role of patience when following long-term economic reforms. Institutional changes often require coordination between government agencies, financial regulators, commercial banks, and international organizations. Each stage involves planning, implementation, oversight, and evaluation before additional measures are introduced. This deliberate pace may appear slow compared with online speculation, but it reflects the structured processes commonly used to preserve confidence and maintain stability within national financial systems. Reliable information continues to be one of the most valuable resources for anyone following Iraq's monetary developments. Official publications from the Central Bank of Iraq, International Monetary Fund assessments, World Bank economic reports, and government policy announcements provide direct insight into ongoing reforms. While these sources may not contain dramatic headlines, they offer detailed information based on documented analysis rather than speculation. Reviewing these primary sources alongside broader economic data helps create a more complete understanding of Iraq's financial direction. As discussions continue across the IQD community, maintaining a careful and evidence-based approach remains essential. Every new rumor, reported document, or claimed insider update should be evaluated according to the available supporting evidence. Independent verification through official institutions helps distinguish factual developments from information that may have changed as it spread through online discussions. This analytical approach contributes to a more informed understanding of complex monetary topics and reduces the influence of unsupported claims. Bringing today's discussion together, the available evidence suggests that the reported transaction limit is most reasonably viewed as a potential regulatory or compliance-related measure if accurately reported, rather than direct confirmation of a specific future exchange rate. At the same time, the frequently repeated 5.89 figure remains unsupported by publicly available documentation from recognized monetary authorities. These two topics have attracted widespread attention, yet both demonstrate the importance of separating verified information from community speculation through careful examination of primary sources. Thank you for joining Global Monetary Watch on July 27 for this in-depth review of today's Iraqi dinar developments. Our goal is to continue examining official reports, economic reforms, and institutional updates with accuracy, balance, and transparency. If you found this analysis informative, thank you for watching. Be sure to subscribe to Global Monetary Watch and press the bell icon so you don't miss future updates covering Iraq's economy, banking reforms, and official monetary developments. Until next time, stay informed. Continue verifying information through credible sources, and we'll see you in the next report.